Does Amazon's move tell you anything more about the broader market right now?
The market's more valuation sensitive, particularly when you have a lot of questions relating to top line growth. And that's really the struggle right now. There's a lot of areas that are just fully priced. Software companies have struggled, with the exception of, say, Microsoft, but I'm talking about the SaaS, very high multiple type of stocks, are very, very high. And that's why you're getting this violent rotation out of those stocks, whether they have news or not. And when they come out with numbers that appear to be quite good, it's not enough to keep the stocks where they are.
Yeah, I think we used to call it priced to perfection.
That's correct, yep.
And so we need to be careful, not just of the FANG stock, but so many of these high-flying tech names. Look at valuations, look at multiples if you own these stocks, and realize that if your quarter is not perfect,
right,
you could see what Amazon is doing right now.
So I think the approach to take now is to forget about growth, value, that whole conundrum of, is it time to get a value? Is it time to stay with growth? Should I buy more growth? Really stick with core. Two of my colleagues and I wrote a paper that's on our website at www.palisadecapital.com that talks about sticking with a strategy around core. In the case we were using, we were talking about small cap core as a strategy versus
what
value.
What does core mean to you guys at Palisade?
It's a combination of value and growth. It's what the Russell 2000 in this case was always before we dissected it and created a value component of it and a growth component.
Are they sort of, for lack of a better term, stuck in the middle with you? Are they stuck? Are they in that middle, the companies that, just don't make the headlines on CNBC?
No, it's the same companies, it's just the weights are different. So for example, the growth weighting is going to have much more technology and biotech and the more volatile areas. And the value is going to have more financials and industrials and things like that you'd consider more of a value. The point is, it's very difficult to time this migration from one side to another. One thing about value, core, growth is you're always going to be the second best. Your core is never going to be better than value or growth because it's a combination of those two.
Any reason to own bonds in any portfolio right now? I know you've liked convertibles in the past.
Well, convertibles offer a very unique risk-reward asymmetry right now, and they are quite attractive, but you want to watch your duration very, very carefully right now. Interest rates are still really low. I mean, think about when we were talking about the markets this time last year, the 10-year Treasury was over 3%, and today it's 1.7 and change. So that's a big move to the downside. You have to be really bearish to get more return on bonds from this point. Everything that can happen is going to be bad. So the asymmetry is just in the wrong way.
Do we need cash, or should we be fully invested in stocks?
You should. I think cash is an asset class you can hold on to while you're waiting for the timing. I'm very anxious to see your piece on ETFs because I think this value growth, these swings, are just exacerbated by how big ETFs have gotten. And these style boxes it's just creating distortions that overshoot in one direction or another. Having more cash at this time will allow you to take advantage of those opportunities if they're presented.
Yeah, and